Hi there. As of now, SUI has dropped over 12% in this week. It's time to look at it through the Wyckoff lens and see what are the whales doing. If you're new to my session, I'll cover the Wyckoff stage, trend change potential, as well as key price levels. And these are not financial advice, they're for education purpose only. The weekly chart of SUI is showing us that this week it has dropped to a point lower than the panic over stage. You see this period of flat bottoming out. And then we've got the automatic rally coming to this subsequent test. You can call this a second test, or you can simply say it's just another test. Currently, the support is at around $1. It's basically the trading range top back in 2024 accumulation. Okay, you see this area. Getting lower than the $1 level, you may still find another support at around 72 cents. Okay, after that, it will be the bottom of the long-term playground. So that's around 36 cents. So $1, 72 cents, 36 cents. Remember, during this stage, what the whales are doing is basically they're going to check out the paper hands or use sufficient news or pressure to turn some weaker diamond hands into paper hands and, let them offload whatever they have on hand. So the whales can scoop them up at a much lower price before they let the price go up again. What we want to see in terms of a positive sign is something what we call a sign of strength. What that means is price advancement, white candlesticks going up with higher than average volume. Look at what happened back in here. The sign of strength, you see this volume way higher than the previous 2 to 3 months. And it goes to challenge the trading range top. Okay, so in the case for this cycle, that means we are hoping to see it. Sorry, just want to make sure I didn't accidentally steal the box. All right, so here you see this line, the yellow dash line, that's around $2. Okay, that's where the automatic rally set the trading range top. And having this big picture, all right, remember it can go lower, but what we want to see is this. This, the micro view. This breakout we already talked about, indicated by the trend line crossing the channel ceiling. Now, it looks like there's another downtrend. So, time to draw a channel box again. While it has broken outside of the uptrend support, this yellow dash line over here, let's move this date over here because that's not relevant anymore. We've got a couple of intermediate support levels, which, like I always said, they are intermediate as for a reason. You'll find they provide certain protection, but those are temporary. Look at what happened today. It didn't even stop over there. Maybe at one point it did, but as of this moment, while we're looking at the chart live, it isn't. So if you say it's overbought, okay, if you look at RSI or whatever indicator you like, let's say you buy into that, say it, and thinks that, it's going to rebound fiercely next week. The 4th of February, or maybe even the 2nd, there are 2 levels over there, meaning 2 triangles. And the price can confirm that this downtrend that started around the middle of the month is going to finish, right? So let's drag this over here. So 2 days to 4 days from now, that's the overbought rebound. Let's say that's what it is. If the downtrend is going to continue, but with slight recovery, let's say the bulls are able to push it back to above this 1.16 level. That date, this triangle over here is pointing to the 9th. So about 9 to 10 days from now, depending on which part of the world you are at. And then the red key level that we talk about, the $1 level. What's the date of that trend change, potential trend change confirmation comes in? It's around the 15th. So right after the Valentine's Day or the Valentine's Day, you receive a very nice news that, or nice candle, very more romantic candle that this downtrend is over. So these are not so worrying scenarios if it does come down, however. All right. Let's say it's heading towards. I'm assuming right now, okay, what happened here is the bottom, near-term bottom. That's why the box is traveling with this slope. If it doesn't, if it goes further, there's still 6 hours for today's candle, or the next day, tomorrow, Monday, goes even deeper. We have to adjust this channel because it's still very flexible. The reference points are very limited right now. When more reference points appear, we have to adjust. So right now, that's where it is. The dates may have to move by a day after I adjusted the box, but you get the idea. It's roughly plus minus 1 day. Okay, if I move it over here. So, that's what the downtrend would look like if it continues. If it goes all the way to this point, that's pointing to the beginning of March. Right around or the 9th or 10th of March. Of course, there are intermediate levels over here. What are these levels? Look at what happened back in 2024. That's exactly where those accumulation happened. All right, remember the beginning when we talked about this? We refer to these area, the 72 cents, the 36 cents before, is it? Am I correct? Am I wrong? Okay, for this case, 75 cents, I might have mixed up with pi earlier. So 75 cents over here, let's draw a line. But remember, we have talked about this. Around 75 cents. Okay. And then over here, that's around 55, 57 cents. Okay, before it goes to this bottom over here, October 2023. That's around 37 cents. So we've got multiple reference levels. So let me take out the duplicated ones. Okay. This is the 0.06. That's 0.55. Okay. That should give us good enough reference. All right. So what's going to happen is that if it comes down to any of these levels, we'll get a couple of more days. But we're still early. All right. We still have an entire month of February to track where it's going. So February is going to be key. If it turns from a downtrend to a sideways trend above the $1 key level, then we don't have to worry that much about those coming. But there's still a chance. If you're interested to get access to these sessions 2 days earlier than the others, it's time to join the channel membership now. Thank you. Here's another video you may be interested in. Here.